All right. Hey, sorry. All right. Hey, sorry. All right. Hey, sorry. Uh-oh. Uh-oh. Working on it. Working on it. There we go. Figured that out. All right, all kinds of challenges this morning, all software related. Not life is complicated enough, right? So anyways, had to update a whole bunch of stuff just to get this working. Sorry about that. Not your fault, not my fault. That's how life goes. Please give me 2 more minutes. Let me get my morning drink. And then we'll do non-farm payrolls live number, I don't know, what is it? What is it? 220, 226, 266? I don't know. Well, we'll get going. Thank you for your patience. Muy bien. Okay. Okay. Now can we get going? I guess one further step, I'm going to need to be able to see the chat. All right. Let's see. I need that page. I'll close that. Let's see where the chat is. Don't need that. I'll close that. let's see, that's all my emails. I'll minimize that. Minimize that. Now I can't even find the YouTube live stream. How cray-cray is that? Let me check a couple other places and then, nope, I'll just have to open it up manually. There we are. All right. Now, now I'm ready. Who's alive? Welcome to Trade Non-Farm Payrolls. Yeah, greetings, Stevie. How's the yachting world? Hey, so what does anybody know what number this is? Which how many months have we been doing this webinar? Trade Non-Farm Payrolls Live. Does anyone know the number? While you're doing that, would you give FXStreet a thumbs up for hosting us? Is it 266 or is it 226? 226, thank you. 226 months in a row they have hosted us for this thing we call Trade Non-Farm Payrolls Live. I really appreciate working with them. If you add that up, this webinar has been going for 19 years. Is that right? 19? So anyways, that's pretty good. That's a good start. I said to my wife this morning, hey, I'm becoming reliable and consistent. Yeah, so very cool. So I appreciate working with FXStreet, and I remember very clearly how this became about. We wanted to do something unique. We wanted to do something special. We wanted to do something in the live markets. No one had done it before. But we also wanted to make a difference because back in the early days of Forex, there were a lot of scumbags and scam artists that were trying to sell get-rich-quick schemes. And their favorite was trading non-farm payrolls live because the volatility back then would move the market, like euro dollar, up 300 pips, down 300 pips, up 300 pips, down 300 pips, right? And so they would give you a sales pitch of, getting rich quick. Oh, I made $5,000 in 2 minutes. So we said, well, the leadership at both organizations, we felt like that was a disservice to the Forex community and prevented its legitimacy. Because if you think about FX, 20-something years ago, well, 25 years ago, because it's the 25th anniversary of FXStreet, FX was just becoming legitimate. It was the wild, wild west back then. And it's because of good people and good organizations like FXStreet that Forex is now a legitimate asset class, not just a wild and crazy, market for knuckleheads and get rich quick people, right? So thank you, FXStreet. I think that is worth a thumbs up, don't you? So I know they have good hearts and good intentions, and this is why I've been working with FXStreet for over 20 years. Yeah. Hey, moderator, could you post a poll for me? The poll would be something like, will NFP be higher, as expected, lower? So higher than expected, as expected, lower than expected, something like that. Could you pop a poll? If you can, that'd be great. So anywho, let me introduce myself. My name is Wayne McDonell. That was me a while ago. I have some gray hairs. What a beautiful young man, though, huh? Okay, that's good. Thank you, moderator. So what have I been doing in these last 20 years? Well, I've been focusing primarily on Forex. But I learned a few things over the years, learned some macroeconomics at a little university called Harvard, and, you know, brought in things like futures and options and portfolio construction into my skill set. I manage charitable endowments. I am now CEO of an ETF company. So if you give up on trading and you want someone else to make the decisions for you, you can buy my ETF. Trades on the New York Stock Exchange. So I've done a lot of things, right? Great. So I like to fancy myself pretty good at technicals and pretty good at fundamentals. But I'm an expert at making mistakes, and I've made a lot over the last 20 years, and I can help you prevent repeating those things. But my intention today is to show you how to integrate both technical and fundamental analysis in what I call strategic and tactical trading. Okay? Very cool, right? Yeah, it is very cool. And so I like to scalp, spot, swing, and carry trade. What we do at the ETF is essentially swing trading. Isn't that neat? But if you look at our current track record, check that out. That's the annualized dividend. Shut the back door. That's our annual dividend. Holy smokes. Not guessing, based on the 2 dividends we've issued since our IPO, that's the annualized. Okay. Okay. Cool. So that's great. So we're going to use TradeRs, which is one of my assets, and it's a beautiful asset. It automates our fundamental and our technical analysis, and of course, there's 4 or 5 hours a day of performance coaching. So you can think of this as many different things. This is like QuantBox, this is like TradePlans.ai, this is like FX Bootcamp, but now all integrated in one. So we're going to use this tool, and you'll learn more about that, but this is our fundamentals. This is our technicals. Very cool, everything automated. And there's a bunch of new things I can show you. We have a lot of data on the vol that occurs around non-farm payrolls, which occurs in 40 minutes from now. For example, if you thought it was going to be greater than expected, okay? If you thought it was greater than expected, it seems to me there's a high probability of dollar strength. What's the probability? Well, based on past performance, it's not a prediction, it's just what happened in the past. Is there a scalp on euro? Yeah. A swing? Yeah. Day trade? Yeah. Okay. Scalp, day trade, swing trade, position trade. It all exists. And so if it's greater, this is what's happened in the past. Okay. Cool. So we have all that data. We'll get into there. Okay. So with good data, both technically and fundamentally, and then, there's helpful, things like seasonality, implied volatility. We have a lot of tools. You can make really good decision-making processes, right? You can have a good process to decide what assets to buy and sell and when to buy and sell, according to both fundamentals and technicals. But you still need someone to execute your trades. And, well, I suggest you get an ECN. Yeah. Here's one. I've known them for over 10 years. You should check out Trader's Way. They're good, they're fast. They have an ethical business model. They're good people. Okay. So if you think about the value ladder, if you want to call it this, if you want to learn how to trade, okay, we have courses in community and coaching that is second to none. Great. If you want to have your trading, your retail amateur trading, to become institutionalized, if you want to have an institutional quality platform and use the coaching as basically a staff. If you want to hire me as your chief economist on your trading team, I meet and do fundamentals every morning, right? We have stock guys and crypto guys and so on and so forth, right? Great, they all work for you now. So if you want to think about it that way, this is like a Bloomberg terminal for your retail trading business. Great. Then you need execution. Great, got that checked off. So you got fundamentals checked off, technicals checked off, community checked off, education checked off, expertise checked off. Great, now here's your execution checked off. But if you decide you don't want to do it yourself anymore, or if you just need someone to balance risk, if you want to diversify, consider our wheel strategy. Again, traded on New York Stock Exchange. So it's like, we can do it for you. You can do it yourself. We have all the execution partners. We have your team. We have your platform. Awesome. So we're going to use all those tools today. So let's get on with it. I did want to cover a couple of things. 6 months ago, approximately, the Fed announced revisions to how they calculate non-farm payrolls. And the revision lowered what had been reported pretty significantly. I think it was 800,000 less jobs in the previous 12 months than they had reported in NFP. So some of that, some of those changes are going to start trickling into into this January non-farm payrolls. So that could monkey around with our number a little bit. Okay. The second thing. What was the second thing? Oh, the ice storm that we had in the south. Actually, it's probably the whole eastern United States. So I flew out of Atlanta, even though it was closed for snow. I was the first person on a plane out of Atlanta and landed in Houston, Texas, and was one of the first people to land at that airport because it was frozen shut. So that affects things. That'll be in our numbers. Also, we had fires in Southern California, which are not part of the normal economy in Southern California, but will likely have some sort of impact on our data this month. And if these things don't get fully put into this one, they'll definitely be in the next one. So we got sort of mathematical changes. We got weather-related changes on the East Coast and on the West Coast. You know, it's complicated. It's volatile. So I would suggest, if I was me, we can pay attention to the headline number. That's fine. And we can look at hourly wages, which is good. Like the wage question is really good if we're trying to figure out what the Fed will do next. Great. But I think if we were going to rely on a number, I think we should look at the unemployment rate. Because remember, the establishment survey, the household survey, and the headline number and wages and hours and unemployment rate. These are all different mathematical data sets. And I think the least volatile one today will be the unemployment rate, and therefore likely to be, the most realistic number that, that comes out today. Everything else I think will be quite volatile, huh? Cool. So let's do a deeper dive and take a look at NFP. Okay, well, let's just do a quick update here. Quick update, yields have been falling and falling and falling. A little pop on Friday or on Thursday. So we're well below 4.5, which is good, but they're up a little bit. Oil down to 71, but stabilized around 70, which is good. It could go as low as 67 before we hit some serious support, but obviously 70 is psychological. Gold is on fire. It's hot to go HOTTOGO. Of course it is. We've been bullish on that for quite some time. S&P 500 back to 61 and trying to hang on, hang on for dear life. We'll see if we can get some clarity if we want to make higher highs. Really comes down to how serious or non-serious our tariff rollouts are. Okay, background 108. This got closer to 107 recently, now a little bit back up, so maybe the recent risk on becomes risk off, but if it goes risk on again, then the dollar would weaken, gold would go up, and the stock market would make all-time highs. Well, we don't have that right now. We'll do a deeper dive in a second. Okay, now the scores were much higher on the stock market indices, and they're starting to cool off a little bit, but are still both seasonally bullish and technically bullish. All the yens are very, very bearish and have been very bearish for a while. Seasonally, they're risk off, and technically they are selling off. Great. Let's take a look. Risk gauges. And we're pretty flat here. We're pretty flat. We're not sure what to do today. This week is just barely risk off. And then the monthly evaluation is barely risk on. So let's take a look at how we get that. Let's just focus on the longer term and see, how we feel about this. When you look at the options trading market, okay, it favors puts. That's bad. When you look at short-term yields, they have come down. That's good. When you look at gold, it's up. I'm going to say that's bad because it's worried about either stagflation or inflation, and that's not a good thing. Okay, I don't think it's aggregate demand because the US dollar is weak, but we'll take a look at that in a second. Okay, long-term treasury yields have come down. That's good. S&P 500 is up. That's good. This is over the last 30 days. The dollar is a little bit weak. That's good. But 0.5% doesn't explain an 8% rally in gold. Okay? So that's why I'm separating the two. Japanese yen is up 4% month over month. That's bad. That's risk off. And volatility is down 16.32% from 30 days ago. And that's good for a total score of 2. So we are just barely risk on. So this is, right? So this is clear as mud. So consider that more, a little bit of risk. Okay. Because it's not clearly one or the other. Scatter plot, boy. So what we're looking at here is, where's my drawing tool? There it is. All right. What we're looking at here is I like to start here. These scores show what we think the long-term macroeconomic outlook is for these assets. So everything over there we're thinking should be up, okay? and everything over here we think should be down. Okay, negative scores. And then we look at what's actually happening today. Are they up or down? Okay, that's down, that's up. So therefore we get this quadrant. Okay? We get this quadrant. So everything over here is bullish today. Unfortunately, they all have negative scores. So something unusual is happening. Is it market reversals? Well, a lot of these yens have double bottoms, don't they? So could they be reversals? Could be, a rabbit, could be. We don't know. Have the fundamentals changed? We don't know. Probably not. Maybe they're out of position. Maybe you'll be selling all the yen pairs today or tomorrow. Maybe. Okay. All right. Well, everything over here, they are also up, but these are expected to be up. They are all moderately to slightly bullish. Notice that we don't have anything aggressively bullish anymore. So everything is moving to the left with big scores. So we used to have things that were 13 and 12 and 11 and 10 as far as bullish scores, but they've all their scores have been lowered recently based on changes in the economic outlooks. Ooh. Yeah. Now, these things are all up today, but look how negative their scores are. So that might be future sells, or they're going to shift from left to right. But this is long-term versus right now. Okay, so all these things are up and they should be. These things down here should be up, but they're not. So that's bearish but unexpected. Okay, so to me, most of this looks like this, most of it. And that means the market is pausing. Whatever the trends that we had in play don't seem to be trending today. Is it because of non-farm payrolls? Yeah, you probably expect that. Is it profit taking? Is it people getting out of the market pre-NFP? Yeah, probably. Okay, but we'll take a deeper dive. What else? Let's just burn through this. Money market back to neutral. It's about at the 8-day average on the 2-year. We call that hot money. Hot money is not hot. All right, taking a look at this, I'm going to say absolutely risk on, but relatively neutral. And our heat map. So the last 7 days, coppers and gold and platinum, okay, these are the things you buy when you're worried about inflation. Silver, okay, you buy real assets when you're worried about inflation. The Fed cut 2 of its cuts out of the summary of economic projections about a month ago. Why? They're worried about inflation. This is the response to that. I've been teaching this for years. Okay? Yeah. And then what? Yen down, yen down. A lot of the yens are down. We did really well on that. Okay, let's quickly look at the calendar. We have so much to do. It's cray-cray. So we have both Canada and the United States jobs report. Later this afternoon, we're going to get an update to our commitment of traders report so we can see institutional positioning. And you're like, Wayne, that's good, but I want to see retail positioning too. Okay. Now the idea here is find out, so this is retail trading. We get this from a liquidity pools used by multiple brokers. So this is as close as we can get to the Forex market without having an exchange. And of course, this comes from government reports. So this is institutional sentiment and this is retail sentiment. The idea is you want to find things that retail's heavily long or short and find out if there's a mismatch and trade institutional against retail. That's one way to use it. Let's get to the employment very quickly. Okay, we had JOLTS drop to 7.6. That's showing a cooling of the employment market. Claims, 219. Well, it used to be 242. Average is 217. We're average right now, so a slight maybe cooling of the employment market. Take a look at the unemployment rate. Okay, we're at 4.10. The average is 4.08. And you're like, well, Wayne, let's do what's the 3-year average? Okay. Whoa. See, we're above average, which is good because what we actually want this to go up because this shows that we're overemployed. How can you be overemployed? Fake money, $5 trillion that the federal government pumped into our economy. If you're not sure why that occurs or the negative impact, at traders.com, I think it's 12, 14, 15 hour long training course on macroeconomics. And I actually show you how to, and I give you a micro example of a macro situation. The macro situation is, let me draw it out, and I'll do it as quickly as possible. The long-term average for GDP is 2.2. We'll call that nominal Y star. Okay. Okay. That's what the economy on average looks like, but we know the economy goes overbought, too hot, too cold. Fed interest rates are going up. Interest rates are coming down, that kind of stuff, right? And we call this the business cycle. So how do you get overheated, and why is that bad? I give macro examples. So how do you make more money as a small business on the short run, but in the long run kill your business? Well, the same way the government does. So I give you examples of that so you can understand. What's the 3-month average, you say? That's smart. Let's do that. 3-month average. And and the 3-month average is 4.1. So if we see this going up, that shows a slowing of the employment industry, somewhat like JOLTS, somewhat like weekly claims. And then, of course, we're looking for inflation and wages. We want to see this come down. Right now, our average is 4.4. Let's do the 3-month average. And this one, yeah, this is the one that won't update. So 3.9, 4.0, 4.0. All right. So we want this number today to be below 4.0. If it's at 4.0 or above, that shows increase in demand. So we want to see this go down. So if this goes down, then it shows slowing of the employment industry through wages, through job openings, through insurance claims, and what was the last one? The unemployment rate. Okay, so going into NFP. Okay, last month we expected 164 and we got 256. So on average, NFP gives you 216. What we want, if the employment market is slowing, we want to be less than 216. And also, we probably want a pretty significant revision in 256. Now, why do I say want? Well, if we want the Fed to cut interest rates and have the stock market rally, then we want to see all these things have sort of showing that there's a slowdown in the economy, and it'll make the Fed feel more comfortable. Because if there's a slowdown, in particular in wages, then inflation is coming down, and therefore the Fed could cut interest rates and everything is right as rain. That would be risk on, and you'd probably get a stock market rally. Okay? If it comes out red hot again, and unemployment goes from 4.1 to 4, and it shows everything's going the wrong way, that we have another 200,000, 222,000 NFP, and wages are going up and unemployment rate falling. What that says is not only can the Fed not cut interest rates, they're supposed to do it twice this year, they take out one of those cuts. That would be bad for the stock market. That'd be strong for the USD. Lucas says, do you think the revisions are having more weight now? Well, I explained earlier that I think we're going to get massive revisions anyways, just because the math is changing. We also have the interesting problem with both the snow and the fires that occurred last month. We also already know, baked into the numerical changes that are coming, that last, in the summer, we were told that the previous 12 months actually had 800,000 less jobs than we were told through NFP. I think what will happen is the revision will be revised. It won't be so dramatic. It'll be 750,000 instead of 800,000. But does that get added back in? Does it get back? So I'm going to go back to what I said before. Most of this looks, I think, is going to be gobbledygook today for all these reasons. And the number one thing we probably want to look at, or not, let's say number one and number two thing, is the headline unemployment rate, which is less sensitive to all these mathematical changes. And then wages, because that's ultimately where inflation comes from. You guys into this? So the one thing you might want to do is just pick a number, up or down. Is it going to be greater or less than? Okay. And by the way, if you're wondering how we get the scores, it's because we look at interest rates, jobs, inflation, productivity, statistical trends, seasonality, retail positioning, and institutional positioning to come up with these scores. And what we have been doing is lining up seasonality with technical trends, both bullishly and bearishly. Okay, so that's what we've been doing. Let's get to the scalping radar. And in 15 minutes, we have our headline news. So you could say, okay, if you think it's going to be lower, then this is what has happened in the past with non-farm payrolls, only in situations where the headline was lower than expected. And it'll show you all of them. And you can pick your time frame. Are you interested in what happens, right? This is like a scalp, right? This is like a day trade. This is like a swing trade. So what kind of trade are you looking for? This is every situation in the past and when non-farm payrolls was greater than consensus. And we look at all the time, all the major dollar pairs, so all the dollar pairs here, on all the different time frames. Okay, what if an asset isn't here? What if Aussie dollar wasn't here? What does that tell you? It tells you, looking at the situation in which non-farm payrolls was actually greater than expected, if Aussie dollar isn't here, guess what? No reliable, repeatable pattern occurred in the past in that scenario on any time frame. Now, if you look at this and you say Aussie dollar, 2 hour, 4 hour, 12 hour, 48 hour, 2, 4, 12, 48, 2, 4, 12, where's the 48? Well, for pound dollar in the past, there was a reliable, repeatable pattern in this scenario for the scalp, the day trade, and the swing trade, but not for 2 days later. There was no position trade that we can discern using quantitative analysis. So if it doesn't exist, it doesn't exist. And we know it, and we'll show it to you. Now, it looks like pretty much everything produces in that scenario. But like Aussie dollar, 2-4, but no 12. 2-4, no 12. 2-12, okay? See, USD CAD, no scalp. So ideally, you say, well, you've analyzed and you think one thing or another. So we'll do less than expected just for fun. Okay, what do we know right away? Has there been a scalp in the past and a swing in the past on euro dollar? Sure. Now, fundamentally though, what are we trying to do? I'd like to sell Aussie. Oh, but look at it, it's a buy in that situation. Huh. What about pound? There's no scalp. Oh. Kiwi. Okay, yeah, I might be interested in scalping Kiwi, but I'd want to sell it. Oh. Well, that hasn't happened in the past. What about USD Kitty Cat? Oh, I'd like to buy this. There's no scalp, which means I can catch it at the end of the day. Oh. So you can see all of a sudden you're like, I don't know if I really like it in the scenario of less than expected. So let's go back. What if the number comes out better than expected? First of all, they're not going in opposite directions. Remember how Aussie dollar? Well, let me just show you. Aussie dollar up, euro dollar down. What the heck is that? Risk. The patterns don't agree. All right, what about this situation? If actual is greater, sell Aussie dollar, sell euro dollar, sell pound dollar, sell Kiwi dollar, buy USD CAD, buy USD Swissy, buy USD yen. That looks right as rain. What about different time frame analysis? Yep, scalp, 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 spot, 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 swing, 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 swing. This looks, so the reliable, repeatable patterns are significantly better in situations looking at non-farm payrolls in the past in which NFP headline number is greater than expected. Huh. Well, you're way better off in that scenario. So would I sell Aussie dollar? Yes, I'm already fundamentally bearish. How do I know? Okay, how do I know? It's in the fundamental analytics tool. We've analyzed at least 8 variables that gives us bearishness. So yeah, I'm a bear, bro. Of course I'm a bear. If you don't know that, you don't know how to trade. Now, you might disagree with me, perfectly fine, because I don't know the future, but I know what my intent is. Okay, cool. So anyway, so we can draw the following conclusion about the movement of Aussie dollar based on the last 12 non-farm payroll events in the United States. If the actual is greater than consensus, 88.9% of the time in the past, the 2-hour technical response on the charts has been down. So here's the plan. Okay, this is the up. If it's less than, this is the down. If greater than. And of course, I can pull these up and look at them anytime I want. And look at the chart. Really? Yeah. Cool, right? So this is what it looks like. On the 10th of January, my true love gave to me. Okay, last time we met, we expected 160. And we got 256. It dropped like a ton of bricks and stopped. So it's a drop and stop. But it did 2 hours later close lower. Okay? Back in December, we expected 200, got 227. This time it went up and then dropped. Closing 2 hours later, lower. On October 4th, we expected 140. We got 254, positive differential of 114,000 jobs, and it dropped like a ton of bricks and closed lower. July 5th, we expected 190. We got 206, positive differential of 16,000 jobs, and it kind of farted around and closed lower 2 hours later. The 7th of June, we expected 185. We got 272, positive differential of 87. It dropped like a ton of bricks and closed lower 2 hours later. April 5th, 200 was expected. We got 303, $103,000 positive differential. The market dropped and closed lower, right? Closed lower 2 hours later. Oh, back in March, we expected 200, got 275. Initially it popped, but then it dropped and closed lower 2 hours later. February 2nd, we expected 180, we got 253, positive differential of 173, and it dropped, and 2 hours later closed lower. How many people think this is good information to have? Even though we can't predict the future, how many people think that that is amazing level of detail? In fact, let me take it up a notch. What about 12 hours after those events? Okay, not only 2 hours did it close lower, 24 hours later it closed lower. Up, down. Okay, look, I have all this data in my database. I have all this data in my database. This is how I know if there's a swing or a day trade or just a scalp or no day trade. It's because I have the data. Oh my God, Becky, right? Yeah. Cool. So later today, we're going to use our technical patterns. Does anybody have the link to the download for the cheat sheet? Radars.com. Is it this one? No. Oh. Yeah, if somebody products no. Yeah, if anyone had to the trading pattern flashcards, if anybody has a link to post for those that don't have them. All right. I am going to read hundreds of articles, many of them on FXStreet, and I'll tell you my opinion when it comes to Forex. My opinion? No. I'm going to read hundreds of articles, and I'll tell you the sentiment of those articles. You ready? Aussie dollar negative, euro pound positive, euro dollar neutral. So maybe pass on euro dollar. Pound yen negative, pound dollar negative, Kiwi dollar neutral. USD CAD neutral. USD Swiss franc positive. USD yen negative. Gold positive. Wait, what? Wait, what are you talking about? I just read hundreds of articles. And I told you what the market sentiment is for each one of those currencies. Now, while I'm trying to let it load, now I'm going to do the same for gold. Anybody trade gold? All right. So, according to Action FX, FXStreet, FX Empire, and Forex Live, over the last 7 days, there were 7 articles, 79 articles about gold on those 4 websites over the last 7 days. If you read all the articles, they're slightly positive on the future for gold. How has that changed over time? Well, we're a little bit less bullish in the last week or so than we were. We were almost very positive. If you look at the last 60 days, this is the sentiment for gold. And if you look at the last 90 days, this is the market sentiment of gold. So we're, relatively positive. Everything's good. Is it going to change? Well, it depends on what gets written over the next 7 days. So we have the 7-day average, and then we have the change over the last 7 days, 30 days, 60 days, and 90 days. And we have the market sentiment for everything that you trade. And it gets updated in real time. So what's your thoughts on USD yen? Well, check that out. Go ahead, go to these 5 different websites, read 33 articles, and you'll find out they're slightly negative. Now, it takes me a couple of seconds. That would take you a couple of hours. 2 minutes. All right, let's go to another tool of mine. This is our headline news radar.
Locked and loaded for the January edition of Non-Farm Payrolls. Signs of strength.
Oil set for 3rd straight weekly decline amid tariff concerns. Chevron accelerates Kazakh oil field ramp-up, sources say.
Australian dollar, US dollar, steady as markets brace for US jobs data. Prepare for the US jobs report with a technical look at the Euro US dollar yen, and pound US dollar.
US dollar goes nowhere with NFP just ahead.
India cuts interest rates for first time since 2020. Gold stuck around 2,165 ahead of NFP release.
BOE's pill. There is an ongoing disinflation process in the UK. ECB's Vucic. Market bets on 3 rate cuts are not unreasonable.
It can say Vucic, but it can't say dovish. Oh my God. Anyways, look at all the flashing we got going on here. This means we have 51 seconds to the Canadian number. Okay, non-farm payrolls. Here it comes. So watch. I think the biggest thing, obviously the headline is going to be important, but as far as our fundamental analysis, I think we should lean on the unemployment rate. But obviously the market's going to move on both the headline number and the revision. "20 seconds. You guys excited? Thank you for being here. Please click the thumbs up button for our host, FX Street. Thank you, FX Street. 3, 2, 1. 4.0. Oh no, it's horrible. Okay, so wow, we got way less than expected. So the people are probably going to discount that because of all the weather and the math stuff that I talked about. But this went up, which is and 111 down. Oh my God, it's great. 7.5 on the U6. Oh my God, 6. Yeah, look at Canada, 6.6. Good job, Canada. Oh my God. Cray. Great, great. Let's go to the chart. Let's go to the chart. Oh my God. Okay, here's our sell zone from yesterday on the Kiwi. All right, let's go to a dollar pair though. Well, first of all, let's go to the indices, the currency indices. And these are all in fibers? Yeah, good. So Canada got good news, and it's benefiting Canada. The US dollar is getting strong on this. I believe it's the unemployment rate going to 4, man. Oh, wow. So that is strong dollar, folks. Show. Well, the good thing is we've been bullish on the US dollar for quite some time. So, but that's proof in the pudding. That is happening. Okay. Wowzer, wowzer, wowzer. So, where should we go first? There's so much to do. Okay, so much to do. Here's the Kiwi dollar plan. And, oh, how did that happen? Hang on, I'm going to look at the camera. How did this happen? Oh, move that over there. All right, so we need to now drop into the smaller time frame. Our sell, let me put it here, is right here, which is, what is that, 50, just below 57. So let's go into an hourly chart. Okay, and yeah, it's actually, our sell was 56.82. So far, so good. Bada bing, bada boom. The pink, by the way, is our sell zone. Okay. And can anybody confirm that our trade plan on Sunday was up and then down? The biggest part is the continue, right? The continue mission plan A is here. Plan B is here. That's what the pink zone is. Wild, right? So we'll see if we can get, if we can't make lower lows here, that with that type of news, then it's very telling. Euro dollar weekly, we've had green on the screen for a while. The whole time I'm a bear. The whole time I'm a bear. Oh, it's going up, Wayne. Yes, so what? Check it out now. Okay, check it out.
Canada unemployment rate below forecasts, 6.8% in January, actual 6.6%. Breaking, U.S. non-farm payrolls increased by $143,000 in January versus $170,000 expected.
Canada net change in employment came in at 76K, above expectations 25K in January.
Canada participation rate up to 65.5% in January from previous 65.1%. United States average hourly earnings, MOM, registered at 0.5% above expectations, 0.3% in January.
United States U6 underemployment rate remains unchanged at 7.5%.
All of this is the new headlines in the last couple minutes.
For U.S. jobs data.
Hey, trader, have you heard the news? Yeah, pretty cool, huh? All right, so yeah, so on Sunday we were down here, and what we discussed as a team was this is our sell zone. It's pre-labeled. See, like here's next week's sell zone. It's already labeled. So we started here on Sunday, and there were two plans: fill the gap, continue the mission, or up to the zone, continue mission. And all of this is like the pivot points, but it's also the longer term moving averages and all that kind of stuff. So like based on this is our guesstimate. So 104.5 is our guesstimate. Where did we get? 104.44. So within 6 pips of accuracy. I mean, good enough for the girls I go with. But that's just long-term dynamic moving averages. This is the sell zone that we had based on pivot points for swing trading. And from swing trading, you try to set up day trading, right? And so check that out. Isn't that neat? Look at the accuracy, huh? Isn't that cool? So now what? Now we needed to make a lower low, lower high. And what's the target for next week? Would anybody like to know next week's projected low? Thanks, David, for the revision. It's even worse, huh? 256 is now 307. Golly, gee whiz, Batman. Yeah. Who wants the projected low for next week on euro dollar? This isn't even the best thing to be trading, by the way, but many of you guys like it. Don't guess. Okay, cool. One oh 101.74 to 101. Parity? No. Here's the guess. If you got a problem, I'll solve it. Check out my hook while my DJ revolves it. Cool, huh? Cool, right? So how many likes have you given FXstreet today for hosting us? Let me do a refresh here. That's it? Would you please give FXstreet a thumbs up for hosting us 226 months in a row for just this one webinar? Please. I mean, come on. Yeah. I mean, your mother would be ashamed if you didn't have common courtesy. Your mother didn't raise you like that. All right. So anyways, let's take a look. Let's go through some of these things. Here's my outlook for pound. This is my 2-year plan. This year and next year, already planned out. And is that important? Yeah, it's important. And then when you zoom in, what's the plan for the next month or two? Up to around 125. And then lower, low, lower, high, lower, low, lower, high, lower, low. Got it all planned out. This week, next week, the week after, the month after, the quarter after, and the year after.
U.S. dollar consolidates on the day. Scotiabank.
Breaking U.S. non-farm payrolls rise by 143,000 in January versus 170,000 expected.
Okay, so I'm just trying to show you, you can be bigger, you can think bigger. Okay, you can think bigger, you can be bigger, you can stay in trades longer. That means you can lower your lot size and take less risk per trade. You can sit on your trades like Mother Goose. Okay. So Canada and the United States, this is probably neutral right now. They're both strong. Okay. USD getting crushed because the next summary of economic projections are almost certainly going to remove one of the cuts. See, we thought 6 weeks ago the Fed was going to cut 4 times. 4 times in 2025. Then at the December meeting, we read the summary of economic projections. I had to do it 3 times. I had to double take my double take because I couldn't believe it. I'm like, dude, they removed 2 cuts. We knew that before the press conference. And then the market went ape crazy during the press conference when Jay Powell told us. We already knew because we're actually reading the summary of economic projections. So I'm like, wait, whoa. There's only 2 cuts. So now time goes by. With this data, the assumption is now there's only 1 cut in December. Maybe. Oh my God. So it's the same as if the Fed just raised interest rates. They just raised, the assumption is, the neutral rate has gone up from the initial assumption. In fact, back in, let's say, November, early December, we had the neutral rate 75 basis points lower than we think today. That's an increase. The Fed, in our assumption of their assumption, we just raised interest rates by 75 basis points in the last 6 weeks. That's dollar strength, my friend. Now, Kitty Cat had a good job report. Kitty Cat jobs were good. So both of these are strong right now. Okay, let's take a look. Okay, last week we were bearish on CAD yen. This week we're bearish on CAD yen. We just had amazing news, but it's still working. Still working. Cool. Let's go to Aussie yen. Last week we were bearish. This week we are bearish. Cool. Look at our trade plan. Up into the, you see it? This has been here for more than a week. Into our moving averages, and everything is right as rain. Let it run. So from 97, and we're down to 95, so it's already 200 pips moving in the right direction. But we'll probably be short for quite some time. Nice to have a plan, isn't it? Kiwi. Let's see, what's the projection? Oh, I don't know. Maybe kind of like that. So this is a follow-up trade, okay? I'll tell you what we've already discussed was down, up, and then down. Now, that might not happen. I don't know the future. But we know 2 things. If it did this, we're no longer bearish. We're neutral. I'm not a bull. Why would I be a bull on Kiwi yen? Have you not done any fundamental analysis? Well, if you've done the fundamentals, I can't be a bull. I can only be a bear. So I sell lower highs or I don't sell lower highs. Okay, you see? That's the difference between being an amateur retail trader and being more professional. I know what my intent to do. I know what my intent is to do. I don't chase the colors of the candles. I'm either a bear today. If not, maybe I'll be a bear next week. Why would I don't care if the candles are green. In fact, I sell green candles. So here's another example. Okay, we did this. We were here on Sunday. Okay, can anybody confirm this? On Sunday, we noticed the gap down. So I said up to fill the gap and then down to continue mission. Can anybody confirm this? That while we were still gapped, while we were still a bear, we said it's almost certainly going to go up. And then continue mission to the downside.
Pound our yen price forecast. Rebounds from 4-month low of 188 Owen the wonder.
Swiss FX reserves reach new highs since March 2023.
Love that squawk, huh? Love it. Cool. So look, it's just how to trade. That's all. Right? It's not a prediction. And I was clear at the time. I mean, if you become a member of traders.com, we don't predict anything. We have data. From here, I have more than 20 years of trading experience. And so I told a story to share how I came up with this, what the experience was and how I basically think of it as a pattern. But it's not an opinion, it's experience. I'm like, well, let me just tell you my experience, and then you can watch it, analyze it, see what actually ends up happening, and then it'll become your experience. Okay? Oh, this would be bad for the stock market, Dan. Think of it this way. Do you want to pay more money or less money for your money? Okay? Or you can say the expected return for a stock is equal to the risk-free rate of return plus the beta of the expected return for the S&P 500 minus the risk-free rate of return. Right, Dan? All right. So if we essentially said the risk-free rate of return is more expensive than we thought based on our expectations for the future, the expected return for a stock would be down because their cost of doing business has gone up. So when you're doing the math here and you're saying the expected return of the stock market minus the yield on the 10-year T-note or the Fed funds rate, whatever you're using as your variable, they're all related. What you're saying is that's your opportunity cost. And what you're doing here is your profitability based on your cost of doing business. So if this goes up and this math on the right shows that your cost of doing business is going up, your profitability is going to go down. So your expected return for that investment is lower because it'll be less profitable because its cost of doing business, otherwise known as the opportunity cost minus the actual, is less. Yeah. Is there another way of doing that? What's the other way of coming to the same conclusion? What's the other math? Any finance people? Any mathy people? The present value is equal to, okay, we'll put future profits. Okay, that's what we'll say. FP 1 plus I, which is we'll call the expected Fed funds rate, to the 1 for year 1, plus future profits. So we'll put this in for this year, 25. Future profits for 2026 is equal to 1 plus the Fed funds rate in 2026 to the 2 plus, and we'll do one more, future profits in 27 over 1 plus I to the 3. Okay, so if we thought in 2025 I was falling, you'd be more profitable. So in your projections as an analyst, you might have had this to say ultimately this was going to be 3.5. I would equal 3.5% interest rate or Fed funds rate. And then year 2, you might have had I at 3.25. And then in year 3, you have I is equal to 2.75. And that's your guess, your projection based on...
Pound outperforms modestly, Scotiabank. Euro steady and tight range, Scotiabank. Fed's Kashkari. The market may be taking the signal that the neutral rate is higher.
Hey, we're talking about that.
Canadian dollar bullish, Scotiabank. US dollar, Canadian dollar declines after mixed US job report.
My God, this is exactly what we're talking about, the neutral rate. All right. So you price all this out and you come up with the value for the company. Based on the value of the company or the value of the asset, this could be an apartment building. There's all kinds of things, right? What is the value? This is a valuation model. What's the value of the stock market? Well, you take your expected profits and the expected neutral rate of the Fed, and you come up with a number. The stock market is worth whatever. The asset is worth, we'll just say 25. 25 what? Doesn't matter. It's just when you add all this up and you do the math. So if you know 1 billion, 1 billion, 1 billion, or 1.1 billion, 1.1 billion, 1.3 billion, whatever. What do you think the future profits are going to be? Then you have to say, well, what's your expected neutral rate of the Fed, right? At the Fed. Cool. So you do all this math and you come up with this number. It's worth 25, whatever. Okay, great. But now, over the last 6 weeks, things have changed and you're like, oh my God, I think this is going to be 4. This is going to be 3.75, and this is going to be 3.5. Okay? Oh my God, the cost of doing business goes up. So even if future profits remain precisely as projected, and the only variable that changed was the interest rate, guess what? The new number for the present value could be 22. So what's just happened to the value of the asset? It fell. So the neutral rate has gone up. This is why I'm like, it's like the Fed raising interest rates by not cutting interest rates. You have to change all your valuation models. And from that, what you do is then you have to do base case, best case, worst case. What if there was more acceleration in the future? What if this was your base case? This is, worst case. What if there's another case? And so you do things like that. This is fun stuff, isn't it? Yeah. Cool, right? Does anybody like this news feed? It's cool, right? You can have it for free. YouTube.com/@traders. Is that going to come up? Oh, I didn't do a slash. Look, you can have it for free. Just subscribe over there. Okay. Squawk boxes like that cost anywhere between $100 and $400 a month. Now you can have it. It's free. You're welcome. All right. What else? Did we do Euro Yen? Yeah, we did Euro Yen. All right. So let's do stocks and commodities like gold and oil. And then whatever. Okay, cool. All right, this is what we've been thinking. Is this vulnerable today? Well, there's two ways of looking at it. The economy is smoking hot, and there is no sense of urgency or worry about a recession. But at the same time, your cost of doing business is going up. So how's the world going to interpret this? Well, your cost of doing business up financially doesn't make things better. Okay. But maybe people are like super happy. Maybe this is all good. I don't know what people want to do. So you have to use your technical analysis, but check out the plan. And we're at a point of, how you say it, contention, right? Like we either make the higher high or we don't make the higher high.
Breaking U.S. non-farm payrolls rise by 143,000 in January versus 170,000 forecast.
See, the way to use that headline news radar is just to have it running in the background like I do, so that while you're trading, you always get the news without having to like read things. If you don't like reading, I solved your problem. Cool. So anyways, this is the plan. We'll see if we can get a breakout. Target 62.58. Sorry, 62.61. Okay, 62.61. Wow. Well, we got to get through that resistance. Are we? Well, I don't know. Do you think this Dow is at a double top? Sure looks like it. Somebody bought the dip off the 21. Yeah, well, that's how you do it. They also bought it off the annual M3 as support. Okay, so is it hopeful? Oh, it's hopeful. Because, right, this is kind of the next play. If it's going to make a higher high, will it? I don't know. But that's how you use price action. Yeah. Cool, right? Yeah, cool beans. All right, but could it double top? Yeah, it might, but I'm not worried about it now because I am a bull. Okay? It's not a reversal yet. It might become one, but it's not one yet. So here's my longer term plan on NASDAQ. It dropped to the weekly 21 for a buy, and now we're back to the top of the range. Cool, man. Cool beans. Is it going to make a higher high? I don't know. But we're riding that weekly 21. That's what I can tell you. I can tell you where the support is, but I don't know if we're going to break resistance. But if I'm a bull and I'm buying that support, why would I buy it if I didn't think it would make a higher high? So at the very least, I jam some stops and start praying. That won't hurt. Okay, let me ask you, and I need you to respond. What am I going to do next? Gold, oil, or Bitcoin? Please type into the chat, gold, oil, or Bitcoin. Gold, oil, or Bitcoin? Gold, oil, or Bitcoin? It looks like we're kind of tied. Gold, oil, or Bitcoin? I think gold is in the lead. Oh, oil's coming back. Gold, oil, or Bitcoin? I think it's between gold and oil now. Gold, I think, is in the lead. No, no double dipping, Johnny. It's so close. 3, 2, 1. Gold! Gold! All right, let's go do some gold, y'all. All y'all. All right, so gold is going up, of course. Okay, you can see our plan, pretty nice. Higher high, higher low, higher high, higher low. What do we call this setup? Role reversal, yep. And the plan here is a trap and break. If you're at really hardcore resistance, and I would call that hardcore resistance, then there's two parts of this. If you're a bull, so I have it here and here. We did this weeks before it happened, everybody. Weeks before it happened. This is not hindsight. This is foresight. Okay? So we were caught here. We went and tested here. And now this is called a trap and break. So if you're a bull, you buy at the bottom and take it up. That's plan A. That's pretty aggressive. But plan B is
gold sees odds for
let it break out and then buy it here.
with upbeat NFP. Pound sterling gives up gains against US dollar after US NFP release.
U.S. stocks may lack direction following mixed jobs data.
Okay, there you go. Can anybody confirm that we did this weeks in advance, not just days? Okay, I'm just trying to make an impact on the newer folks so that they're more receptive to learning. It's not about me being right, it's about me teaching you how to make decisions. Disinflation. Emerald, why would you expect disinflation from more people working? Okay, cool. That's a lot of love. You see all the love popping up? Thank you for all the love, everybody. I appreciate that. Okay, so there's a trap and break and roll reversal. Okay, this is a roll reversal. This is a roll reversal. what we mean by role reversal is, right, resistance becomes support. This is resistance, then it's support. This is resistance, then it's support. It's like the basics of trading. Cool. Cool. Okay, let's do some technical. What do you want to do? Gold, oil, and Bitcoin? Yeah, I guess so. But let's do something different now. Cool. Hang on. There we go. Let's do something different. Let me show you something. Let's do, I'll turn all of them on if you want. Okay, great. We can do all crypto, or we can just do Bitcoin. Let's do Bitcoin and Ethereum. And let's do oil and gold, but not silver. And let's only do trending patterns, not reversal patterns. Or do you want reversal patterns? Okay, we'll throw some harmonics on there. All right, cool. Save. Let's start with, lots of people wanted crypto off the bat, so let's go there. All right, so we're only looking at trending patterns. These are trending patterns forming. These are not signals. Okay, if you're looking for a signal service, go somewhere else. Go to FXstreet, they'll sell you signals. Okay, I don't sell signals. Never have, never will. These are patterns forming on Bitcoin and Ethereum. We're looking at the 15-minute, the 30-minute, the 60-minute, the 4-hour, and the daily chart. And we're only looking for harmonic reversal patterns and trending patterns. So trending and reversing. Okay, Bitcoin, an hour ago, we had a rising wedge reported to you. And rising wedges mean up. And you can see, isn't this amazing? So this came out an hour ago. But check this out. Let me open this up in a new tab. Okay, there's the volatility that occurred on non-farm payrolls. Oh my God, these charts are live. Shut the back door. Yeah. Oh my God. So anyways, up and produced. Now Bitcoin on an hourly chart, the 60-minute here, shows a triangle, which is non-directional. Now, you might have been taught triangles differently. And that might be if there was a previous bullish trend, then you're expecting this. If there was a previous bearish trend, then you're expecting that. Well, you're probably taught how to trade incorrectly. So I look at this and say, it's non-directional. So the way I would trade it if I were me, as we get closer to the apex, I'd let it break, let it make a new higher high, and then I would catch the new higher low,
the U.S. jobs data,
which would look like this. So we get rid of the triangle and we replace it with a technical trend. Well, that's how I do it. Cool. Ethereum, 2 hours ago, we get a pennant. Oh no! Okay, a pennant. Yeah, doesn't occur very often. Trying to delete this. There we go. I suppose we would. Okay, but I don't know. That's just the pattern. Do I actually want to do that? Well, you have to make fundamental decisions too. You may look at that and say, well, that's happening. You can't deny it. That is happening. But it doesn't mean you need to buy it or sell it. Ooh, there's your Gartley harmonic. This came out a day ago. Yeah. If you don't know how to trade this, I have a cheat sheet for you. Flashcards. Let me get that link because I don't think anyone else posted it. YouTube.com/@traders. I think they're going to be here. Are they, is it on this? Yeah. Download free chart pattern. All right. So this is a cheat sheet. I'll put it here. Okay, this is a cheat sheet. I'll show you what it looks like. Oh, can't have that. Okay, so you get these little cheat sheets. Cool. And I know what you're thinking. You're like, if you fill this out, you're going to get 200 emails from me, right? No. I think you get one email. And it's the download. I think that's it. Yeah, it's not gonna do a bunch of follow-up and sales pitches and all that kind of stuff. No, I just give you the value. And it'll show you how to trade this, right? And a bunch of others too. Okay, cool. And so I look at this and this is what I'm thinking. How about you? So that might override what I see over here because this is a 4-hour chart. That's also happening. So it's a pennant killer. And I would always rely on the higher time frames. Okay, so on commodities, what we said is let's look at gold and oil, not Brent, just US oil. And, oh, I thought I turned silver off. Did I turn gold off? Well, I guess we'll do silver. I clicked the wrong one. I can't do two things at once. All right, so let's go through the 15-minute chart, the 30-minute chart, the hourly chart, the 4-hour chart, and the daily chart. You ready? 3, 2, 1. Okay. 15-minute chart. If you don't know an ABCD, it's in the chart pattern. How about this? 2 hours ago, falling wedge on the 4-hour. Ooh. We dropped to 70-something. Does this mean buy it? No. This is not a signal service. If you don't know how to trade, then take the training courses that come with traders.com. If it breaks out, then that's what you want to look for next in the future. But then it'll be a short-term bullish trade, or a trend, I should say. But a falling wedge is not a buy. So, does a falling wedge as a pattern show strength or weakness in the asset? Please answer quickly. A falling wedge, does it exhibit strength or weakness? Quick, 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 quick. Quick, 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 quick. Hello, strength or weakness? It's a falling wedge.
US dollar consolidates after upbeat NFP release.
Weakness. So the up arrow, is that an opportunity or a threat? Quick, 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 quick. Go, 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 go. What's the major malfunction? This is a threat. SWOT analysis. Okay, let's do the next one. Strength, weakness, opportunity, or threat. Well, it looks like weakness. And there's two legs here, actually. This could be an opportunity, that's a threat, and then that's an opportunity. Okay, and then, okay, silver, 4-hour chart. Strength or weakness? It's an up channel, strength, opportunity, or threat. The next leg is up. That's an opportunity. Cool. So there's two assets, and I just went through 10 charts. Okay, let's do this differently. I want to get rid of Gartley's. I only want trends, okay? Okay, check this out. Ready? Remember, every every currency pair on 5 time frames. How many charts is that? Hundreds, right? Okay. And I only want trends. So now you got to go to Aussie yen, 15-minute chart, 30-minute chart, hourly chart, 4-hour chart, and daily chart. And then only label or discover uptrends, side trends, or consolidation trends on all time frames, on all currency pairs, and then look for opportunities or threats. Now, you should have an opinion based on your fundamentals. I'll just pretend technicals are the only thing in the world, okay? Non-directional. Okay. Oops. Okay, let's see. Non-directional, weakness, that's an opportunity. A flag. Ooh, that one's pretty rare too. Okay, that's probably weakness with an opportunity. If it does this, then take the next one down. Okay, what do we see here? Delete. Okay, we have a weakness with an opportunity. We have strength with a threat. We have consolidation, no trade. Okay, no trade, but if it does break out, you take the pullback. Okay, rising wedge is strength. This is a threat. Look at, we hit the target, it's come up. The next trade might be down. Okay, pennant breakout. It was showing weakness, and right now this is a threat. Moving along, USD Mexican peso. Consolidation, consolidation. This is weakness, but that's a threat. How am I doing? Do you spend more time on your charts than this? I probably went through 50 charts already. Okay, this is weakness, this is a threat. Okay, this is consolidation. This is weakness, that's a threat. So maybe trade it later today. Consolidation, consolidation. This is strength, but that's a threat. Wow, lots of pausing here. Okay, this came out a day ago, CAD Swissy. This is strength, that's an opportunity. And ascending triangle, that's strength, and that is an opportunity, and it's already produced. Okay, cool. Notice these are long-term charts. You were given a heads up yesterday. Let's go even further out into the future and do some more Forex trading. Am I going too fast? I just went through 100 Forex charts. I'm looking for opportunities. Not an opportunity. Falling wedge, that's weakness, but this is a threat, not an opportunity. Okay, this is non-directional, not an opportunity. Wow, I'm just crushing it. Okay, not an opportunity. This is weakness. This is a threat, not an opportunity. This is showing weakness and the arrow's down. That's an opportunity. This was good. What is this? Pound CAD daily chart. And you were told 3 days ago, oh, you mean before the Canadian news? Yeah, look at the RSI overbought. Very cool. Let's keep going. Let's keep going. These are big charts, man. These are dailies.
Equity futures are flat ahead of the open.
Strength.
Euro US dollar weakens as US wage growth heats up.
Freedom
Weakness,
report.
opportunity.
Reports. Strong revenue growth in Q3 2025 fiscal year.
You see that? Rand weakness opportunity daily chart. Euro dollar weakness opportunity daily chart. Okay? Cool. Let's keep going. Aussie CAD, rising wedge, no opportunity, so that's strength, but a threat. This is a Euro pound daily chart, and this shows weakness, and that's an opportunity. You were given that heads up a week ago. You should already be loving life, living large on this trade. Let's keep going. USD Swiss franc, this shows strength, and that's an opportunity. Okay, came up 5 days ago. Looks like we're still trying to figure it out. Up, down, up, down. Remember, this pattern hasn't happened yet. So you want to trade in the direction of the prevailing trend, but if it breaks down, that will be technically important. But right now you're buying at support. Okay. Now I look at that, I'm like, I don't want to trade these together, so I pass on that, but you do you. Okay, because I have fundamental reasons, not just technical. But we're just doing this technical, right? So technically, okay, this shows strength, and this is a threat, no opportunity. This shows weakness, and that's an opportunity. So let it come up and then sell it high. Okay, you should have been well on this a week ago. Flag breakout, yeah, and that's working, so that's weakness. It's already produced. Notice this, 5 days ago, it had it coming down, and now what you want to do is look for a lower high and then lower low. So your new opportunity is probably somewhere in here. So now you go to your charts. So you wouldn't trade on any of these. You just now know there was only about 6 charts out of 1,000 that had patterns that were opportunities for you. I'm done. Okay, these are just patterns. They're just one part of your analysis. You can do more than this, but I would write down the things that you ended up wanting to buy or sell. And now what you did is there's 994 things that are not worth your time. And there's 6 things that you should go investigate on your charts. You see? How long did that take me? Well, it took me a long time to say it. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 27. So there's 30 times 5 time frames. So I just went through, right, 150 charts, and I can do it in about 2 minutes. And now I only know trending scenarios that show the patterns that I'm looking for, which is continuation. 15, 30 hour, 4 hour daily. Yeah. 150 charts. I can find the 6 things I'm interested in, and it takes me less than 2 minutes. Now I know trends with patterns that have legs in the direction of my bias. Takes 90 seconds. How long will it take you to go through 150 charts? It's cray-cray, isn't it? Okay, the stock market is opening, so we have lots of implied volatility. We can go to our scalping tool. Pull up our implied vol. What's going on here? I have Forex on, huh? Interesting. Let's do the stock market for once, huh? All right, how many people here trade the stock market? Yeah, that counts. So we're only going to analyze the indices.
Oil prices edge higher, but set for third straight weekly decline.
Cool. So if you're trading FTSE, you're about 4 hours late. You need to start around 6 a.m. as implied volatility picks up. So most likely you would have been selling around the 4-hour implied high. Your target today would be here. So the next leg would look like this to you. Now, how do we get this? We look at every Friday throughout the day. So I can tell you there's low volume here, or I should say low volatility. Volatility is lowest at 6 a.m. and rises up until the U.S. stock market opens. This is for FTSE. And so we look at just Fridays, just FTSEs, and we get the implied vol through historic Fridays for FTSE. But then we analyze an hourly, 4-hour, and daily implied low, hourly, 4-hour, and daily implied high. And this updates every 15 minutes. So they update up and down, up and down. It's like almost like pivot points that update every 15 minutes. But on the rolling daily, the rolling 4-hour high, the rolling hour, not this hour, every 15 minutes, that updates to the new 60 minutes. So they would widen here and shrink here. So these are non-directional, but they're very specific. So if you wanted to be a bear, okay, you'd be selling at the higher end of these things. Because based on what FTSE has done this time of day on this day of the week, it doesn't go higher than this level. So if you're a bear, that's your implied resistance. Oh, cool. What about the S&P 500? Okay, here's your implied 4-hour low. Cool. Okay, around 5 o'clock in the morning is when you buy this. And right about now, at the stock market open, from the rest of the day, we actually lose volume. Which means if you log in to trade the stock market here, you're not optimizing your potential. The more you trade, the less everyone else trades. Maybe they're afraid of you, but the thing is, I have the data. So you should be building your positions here like everybody else, and then fade. Here's the London close. Volume drops to back significantly. And then you get a little bit of an increase at the New York close, and then a total collapse. So the way to trade this is an Asia fade or front run of the open. Okay? Cool. This would be Eastern time. Great. What about NASDAQ? 4-hour implied low. So if you're a bull, that's your support. Cool. Let's go to ASX. Let's go to Australia. Is this a good time of day to trade ASX? Believe it or not, the answer is yes. Is it the best time? No. But look at that. When is the best time of day on Fridays to trade ASX? Asia open, bro. Then it fizzles down a little bit at London, fizzles down, and much better in New York. So do you trade ASX at London open? Nah, you're better off Asia open and New York open. Well, at least on Fridays. Is that the same on Tuesdays? No. But check it out. Right? I would guess, since we already know Sunday, in which is Monday for Australians, Sunday is the best boost in vol. So Sunday, Asia open, you have probably the best volume and volatility you could hope for if you're trading ASX. Once again, non-directional. So if you're bullish, this is all that we know. If you're a bull on ASX, based on all this information, that's the implied low. Well, Wayne, what if I'm a bear? This is your implied high.
Turkey Treasury cash balance up
For
to
the
4.9B in
for the 4 hour.
January from previous 323.9B. Trump will meet with Japan PM Ishiba today. What to watch for? U.S. stocks are marginally higher after the U.S. jobs report.
Right? There's two scenarios here. You have to decide, are you a bull or a bear? And then it calculates how much this asset moves throughout the day and for each day of the week. It helps you identify what's normal for this asset. But you'll also notice that there's a lot of things that, everything here says high and low. If I turn everything on, so we have this for commodities and crypto and Forex and individual stocks. Let's turn everything on and check it out. Okay, there's a lot going on now. But what I wanted to show you is if we go back to like page 4, look, these assets don't do amazingly well on Fridays this time of day. Oh, yeah, you missed your hour on Exxon. This is Exxon. You should have bought it. You either buy it at the end of the day or at the beginning of the day on Fridays. Best day is Monday to Tuesday. And then check it out. Wednesday, Thursdays are terrible for trading ExxonMobil. Okay, what about the 10-year T-note? Clearly good times a day. Front run it in New York. How does the 10-year T-note produce throughout the trading day? Less and less volume and volatility on Fridays, to the point where you've already missed this trade, son. Okay, well, Mondays are good days. So Monday around 5 or 6 a.m. in New York, front run, you should be hot to go, HOTTOGO, because that's the best day of the week and the best hour of the day. The best hour of the day of the best day of the week. And so right now it's like Fridays between 9 and 10 a.m.? Nah. Probably stay inside the 4-hour range, huh? Dude, are you guys impressed? This is page 2. These are all good things. Euro dollar. Okay? So we just had our crazy NFP. What do we know? Daily projected high. 4-hour projected high. Okay? So if you were a bear, how would you play this? Down, 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 up, up, sell, and there's your target. Is this a pivot point? No. Is this support on the daily chart? No. It's not doing that. It's calculating based on what it usually does on Fridays. And it's projecting the high and low of the day based on what it usually does. In the past, looking at many Fridays, calculating the range between the highest high and the lowest low daily, the range for the highest high and highest low on the 4-hour, the range between the highest high and highest low on the 1-hour. So if you're a bear, you combine them. If you're a bear, there's a top, the next top. And based on what's happened in the past, what's the projected low? Right there. Okay? So you can't go back and look at dozens of Fridays at 9 in the morning. I can. And guess what? On Sunday, Monday, Tuesday, Wednesday, I can do all those calculations and it takes me seconds. You don't have traders? I bet you don't even know. How are you supposed to predict the future and set up strategies to take advantage of your vision if you don't have past data to even analyze? Are you making it up every day? You just trade euro dollar every day because you like it? Are you guessing where to put your stops? Swing traders, you should probably have your, okay, if you're swing trading short, for example, if you're swing trading short, this is your plan, where's your stop? If you're swing trading long and you're going to trade a double bottom, look, it predicted it. You just had to be a bull. So now you think you're going to go make higher highs and higher lows, right? Where do you put your stop? The numbers are here. And if you're not sure what this means, you can just read. It's all there. Dude, I want you to understand that trading and investing is a competition. Are you competitive enough? How do you compete? I suggest you have better data. Then I suggest you be able to analyze hundreds and hundreds and hundreds of charts quickly so that you can discern opportunities and threats. Stop wasting your time. And third, you get performance coaches on your team. I could be your macro economist. You can have a team of experts. Do you have a crypto guy? We have a crypto guy. Okay. What about someone that trades the stock market indice? Okay. Would you like to work with someone who trades the S&P 500 every day? In fact, has been doing it every day for years. In fact, has been doing it every day for years to pay the bills and the mortgage. Would you like to work with that person? How about someone that understands technical analysis, fundamental analysis, price action, options trading, flow analysis? How about someone that can program algorithms and pull in data and do calculations to tell you all kinds of predictive and analytical data so that you can make informed, intelligent decisions? Dude, we have a huge team. So if you don't find yourself competitive enough, then I suggest you consider trying TradeRs. Later today, Brian's going to lead you in crypto trading. How about scalping market opens? How about Sunday prep? How about technical analysis? How about fundamental analysis on Monday? On Monday. Yeah, where we go over the new Commitment of Traders report. Okay? I want you to start taking your trading seriously. Maybe you think you have, but if you don't know what you're doing already for next week, you're behind. There are people that are more competitive than you. If you don't have a plan for Monday, Tuesday, and Wednesday, we did all of that yesterday. You're already 3 or 4 days behind. You don't know the difference between institutional positioning and how about changes in capital flows week by week? You don't know how this has occurred over time and how it impacted price. You don't have that kind of data, you're not going to make it. You're not competing. People often say to me, what do you think about gold? What do you mean, what do I think about it? I have it seasonally. I have it based on economic conditions. I have it statistically. Okay, that's before I even open up a chart. Like, what do I think? What do you mean? When you ask me stuff like that, it's like you want to know my opinion because you don't have an opinion, or you want to compare your opinion to my opinion. I don't have an opinion. You have to understand that. I have data. I have lots and lots and lots of data. There's the best case, base case, and worst case scenario for gold for the next 7 days. Oh, when did I become bullish on gold, you say? After it started moving, Wayne? Maybe this is all hindsight. Oh, really? Well, let's double check that with our back tester. No, we became bullish on the 16th of January. And then price went up. You're welcome. So if if you're not able to pull in this kind of data to develop your strategy, you're not competitive. You have to know what should be. You need to know what is. You need to be able to access and analyze so that
Canadian dollar, good time to buy the US dollar on dips, TDS.
The FX market is disagreeing with the fixed income market today.
So, right, if you can't put the unemployment rate into context and see that it's actually dropping now from 4.1 to 4.0 and how that impacts monetary policy at the Fed, if you don't understand how to do that, you're not going to make it, in my humble opinion. Do you know what this is? Fed policy in the future. How do we get this data? Fuzzy logic, neural networks, artificial intelligence? No, I pull this out of the Fed's database. This is a visual representation of the summary of economic projections. There's the forecast inflation. Here's the forecasted interest rate. And what we just saw is likely a change in the SEP that could push this up or push it over. Okay, and then we can compare this with all the different central banks around the world. What is the Bank of England telling us? I have it plotted out. People have been debating what the Bank of Japan is going to do next, and they're shocked about the interest rate hikes. We had them planned out weeks in advance. They're not going to raise again for months. You're fine. Don't worry about it over summer. Oh, what? How do I know this? This is what the Bank of Japan is telling us. We pull it out of their database. So they're going to raise in the second half of the year, and they're only going to do it once. What debate? There's no debate. This is what the Bank of Japan has told us. Okay? Amazing stuff, right? How about let's do Aussie, not Kiwi. So there it is. Cool, right? It's nice, right? So anyways, I'm giving you sort of a bitch slap and a rah-rah speech at the same time. I want you to succeed. I want to work with you every day. There are resources available. You have great tools. You have great data. It'll help you make smarter decisions. It'll help you save time. You surround yourself with like-minded, successful people and professional advisors who can work with you on your trading desk every day. It's really cool, man. Yeah, it's really cool. Do I bring things like seasonality to our ETF traded on the New York Stock Exchange? We make trades every week. Okay, let me just pick one here. Kiwi Cat. I have no idea about Kiwi Cat. Right? Do we use seasonality as professional traders on the New York Stock Exchange? Yeah. Check it out. So according to my research, January is a bad month for Kiwi CAD. Oh, did it fall? Huh? Yeah. Yeah. Huh. Well, hell's bells. Cool. Okay. There's a little bit of a rally at the end of the quarter. Week 11, you should look to take it down. week 20, which is probably somewhere in here late April, is that these are monthly, by the way. These are monthly. This is the weekly projected low for Kiwi CAD. Week 20. So somewhere between week 18 and week 22, you should look for technical market reverses. And then what? Up through the summer, there's a bit of a dip and then close higher at the end of the year. Oh, you don't know that? You can't do it week by week? You're not competitive. Because other people do, and they're making better decisions. So that's a bitch slap, but it's also a wake-up call. And you have all of this available to you now at traders.com. It's the accumulation of, 20-something years of me building better and better and better and better and better resources. Okay? So thank you to FXStreet for hosting for almost 19 years. I appreciate FXStreet. They were the only resource I had when I started trading Forex 25 years ago.
Gold weekly forecast, gold US dollar sets new record high as US yields push lower.
Tech sector shines while Amazon faces pressure. A look at today's market movements.
Exclusive Chile's Codelco targets 1.391 million tons of copper output in 2025.
Sorry about that. I hate talking over myself. So I will leave you with one more thing. Okay, one more thing. I'm going to leave you with a little present. YouTube.com @traders. So you can download the free reports. But here's the free squawk. I'm going to head over there now if you want to hang with me and shoot the breeze. But thank you to FXStreet. Thank you to our moderator. Thank you for your time. I know 3 hours is a long webinar. But I'll be over there. I'll see you soon. Peace on earth. May the pips be with you. May our profits be above average. Click on the link. I'll go hang out with you over on the live squawk. And again, thank you, moderator. Thank you, thank you, thank you. Have a wonderful weekend to everybody else if I don't hear from you soon.